Welcome to another insightful session on our investing tutorial channel. Today, we're delving into a crucial topic that impacts the financial well-being of millions across the nation: the pervasive money mistakes many Americans make through credit card debt. In this episode, we'll dissect the common pitfalls, explore the consequences, and most importantly, equip you with the knowledge to avoid these financial missteps. Join us as we unravel the intricacies of credit card debt and empower you to make informed decisions that will safeguard your financial future. Whether you're a seasoned investor or just beginning your financial journey, this episode is packed with valuable insights that can reshape the way you approach credit and ultimately pave the way for a more secure financial path. Let's dive in. If there's one thing you take away from all the videos I post on my YouTube channel, it's this. Despite all the negativity in the world, there are many people who profit from people's failures and financial ruin, but you can still succeed, become wealthy, and accomplish anything you set your mind to as long as you're willing to put in the necessary time and effort. In fact, recent data indicates that the United States of America has broken a record for the total amount of credit card debt. The amount of credit card debt in the United States of America is currently $1.13 trillion. This is significant because, in addition to the debt being accrued, more and more cardholders are falling behind on their credit card payments and carrying more debt each month. Allow me to share a passage with you from the Economic Research Advisor of the New York Federal Reserve Bank. Auto loans and credit card transitions into delinquent are still a rise in financial stress above pre-pandemic levels, indicate a rise in financial stress, particularly among younger and lower-income households. You may be asking how much these delinquencies are rising at this point. The New York Federal Reserve Bank reported that there was a 50% increase in credit card delinquencies between 2022 and 2023. There are two possible approaches to address the issue of why credit card debt is increasing so rapidly and why an increasing number of Americans are using credit cards to finance their purchases. I'd like to refer to it as the you problem and the me problem. The you problem is that living expenses have increased due to inflation, and everything outside of you is the source of this. In today's landscape, where the cost of living outpaces income growth, it's vital to adopt strategies that mitigate the impact of external financial pressures. Food costs have increased significantly due to inflation, as has the cost of housing and other necessities. The second issue you face is the rise in interest rates, which makes everything more challenging, the job market more competitive, and loan payment more costly. The third issue is that everyone on Instagram seems to have a higher standard of living. Since everyone is buying nice stuff, I should be able to have some of it too. The fourth issue is the job market. It's always shifting, and we're currently experiencing this strange shift in it. It is more difficult for people to get decent jobs. Thus, these are all the issues that you face, issues that are caused by the government, the Federal Reserve Bank, the economy, Wall Street, my boss, and all of these things have compelled me to incur credit card debt. However, there is another way to look at these issues, and that is as my own problem. I have a spending problem right now, of course. It's far easier to point fingers and place the blame elsewhere. Blame Wall Street, blame inflation, blame interest rates, blame your boss. But the bad thing about that is that it doesn't truly solve the problem. And yes, all of these issues are serious ones. As I mentioned at the start of the movie, there are many jerks in the world who take advantage of those who are financially foolish. Financially illiterate people are highly coveted by banks and credit card businesses alike, as they provide lucrative opportunities for them. However, you can still succeed in this system despite these obstacles. The first step in succeeding in this system is to cease focusing on your own issues. It's important to focus on your own difficulties instead of those that are outside of your control, since you have more control over them. You are powerless over your difficulties. You have no control over inflation, interest rates, Instagram, or anything else that comes up. However, you do have control over how you view the world, how you manage your finances, how you spend it, how much you spend on impulse purchases, how you decide what you need versus what you want, how you create a budget, and how you create a financial plan. You have the power to decide how much of your income goes toward investments versus savings. Most people don't want to do this because it requires a great deal of financial accountability and responsibility. This is difficult because it's easy to point the finger at other people for your financial problems, but the reality is that blaming others won't make your current situation better. I completely agree that there are problems with inflation, interest rates, the job market, and the economy. But what about your own financial situation? Talking about economic issues won't improve your personal financial situation unless you change how you invest and use your money. As a result, we know that you have a lot of problems, but you also know that those problems won't solve your own problems. So if you want to solve your own problems, you must start with yourself. This means that you must look at how you are handling your money right now. Take serious action and solve your own problem without worrying too much about your own problems just now, because you need to get out of your current situation. And to better understand why, let's review what the New York Federal Reserve Bank said. Again, this is straight from the bank. They quoted what would happen if the economy slowed down and the rate of unemployment increased. The New York Federal Reserve Bank has issued a warning that credit card debt is a bit of a concern if we see a slight economic downturn. In other words, a mild economic downturn could turn into a deep one due to rising credit card delinquencies, which could then lead to a self-reinforcing credit crunch. In the event that layoffs and unemployment increase, this could become a much more serious issue because so many Americans rely on credit cards that are fully utilized. If they needed additional funds but couldn't manage to pay it off, they can begin to see how that could be problematic, which is why they are concerned about a potential credit crunch, because so many people are already heavily indebted from this, quote, robust economy. The question now is what to do. I'm going to discuss some doable actions you can take if you are having trouble paying off credit card debt. But before I do that, I want to share with you some information for those of you who are interested in investing and want to be informed about current events in the stock market, real estate market, cryptocurrency, and overall economy. Now let's return to the original issue. If you are having trouble paying off credit card debt, you shouldn't worry about investing your money just yet. This is the fundamental step towards establishing your own wealth. It is not necessary for you to worry about creating a financial system, investing your money, or any other financial jargon. Instead, you should focus on paying off your credit card debt. This is because when you pay interest on your credit card debt, which costs you 20, 25, 27, or 30% annually, you are enriching the credit card company and making them wealthy at your expense. At this point, I have no problem with you going out and making money for other people. My issue is that when you go out and spend money you don't have, or when you go into credit card debt, you're spending money you don't have. For this reason, when it comes to credit card debt, you should become extremely focused on it, because if you invest your money in the stock market, for example, your goal is to get a 7 to 10% return annually. This is because the stock market has historically returned 7 to 10% annually on average over the past century. Now, do the math. 25% of your annual credit card debt is from the stock market. Investing in the stock market may not guarantee a 25% return, but it can help you pay off your credit card debt 1 year early. You might earn 10%, 15%, 3%, or even lose money. So if you have credit card debt right now, you need to become extremely focused on paying it off as quickly as possible. One thing I like to tell Americans is that if they have credit card debt, they can't afford to subscribe to Netflix. You might be thinking, but Netflix only costs $15 a month. Well, that means that the $15 a month that I'm worried about is equivalent to 2 hours a day that you're spending on Netflix, because if you have credit card debt, you need to become intensely focused on your financial education in order to obtain the extra funds necessary to pay it off. You also need to acquire the financial education in order to earn some additional funds in order to obtain the financial education necessary to pay off your debt as quickly as possible, because in addition to holding you back, it will be the chain that keeps you from ever being able to creating wealth. When we discuss reducing credit card debt, we are not talking about doing so to create wealth. Rather, we are talking about paying off your debt in order to reach zero. I don't really care if you're pro or anti-credit cards. What matters to me is that you're anti-credit card debt, because that's what prevents so many people, especially in America, from ever building wealth. If you have credit card debt, you need to pay it off as soon as possible. If you don't have credit card debt, I have no problem with you using a credit card because I use mine for almost everything because I get perks and rewards. And guess what? I've never carried a balance. I'd want you to know that yes, there is a lot of garbage out there. Interest rates are a problem. Inflation is a problem. There are problems and warning signs in the economy. But you have to kind of draw this barrier and realize that's the problem. I can't control it, but I can control what I do with my money, and I can assure you that I won't suffer, my family, my community, or myself, because other people think it's acceptable to have credit card debt. Does not imply that you can afford to have credit card debt. In fact, if you want to become wealthy, you cannot continue to pay the credit card companies the thousands, tens of thousands, or hundreds of thousands of dollars in interest that so many Americans will be paying. This is the point at which I want you to make that adjustment for yourself and your family. In conclusion, understanding the pitfalls of credit card debt is crucial for financial well-being. As we've explored in this investing tutorial, many Americans unknowingly make significant money mistakes by falling into the trap of high-interest credit card debt. By adopting a proactive approach to financial management, such as budgeting, emergency funds, and informed credit card usage, individuals can steer clear of these pitfalls and build a more secure financial future. Remember, investing in your financial education is just as important as any other investment, and by making informed choices today, you pave the way for a more prosperous tomorrow. Thank you for joining us on this investing tutorial journey. If you found this information valuable, don't forget to like, subscribe, and hit the notification bell to stay updated on our latest content. Feel free to share your thoughts and questions in the comments below. Together, let's empower ourselves and others to make sound financial decisions and build a path towards financial success. Happy investing!